Hey, this is Awais with EminiPlayer.net, and this is a recap for Monday, December 5th. So heading into the open, we knew that the buy side was dominant and in control. We had the pre-market support at 96.75 to 98.75. This was the aggressive area of support where if the market was truly strong and the buyers continued to be aggressive, then ES could hold above 96.75 to 98.75. Our upside objective was the 08 half to 10 half initial resistance, where responsive sellers could technically still be active, but it's something we would have to gauge in real time in order to determine whether the zone was worthwhile to short on first test, because the larger time frame bias was bullish and the short-term bias was favoring the buyers as well. And in the event of a breakdown below the pre-market support, we could still get buyers active at pretty much every zone on the way down, and that's why our focus would still be more on the long side, and we would continue to be cautious and conservative on the short side. So that being said, let's jump into the chart, see how it played out. So we have three possible trade setups today. The first one is off of the pre-market support zone, a long setup targeting the initial resistance zone. And on any of the setups today, it's really going to depend on where you fall on the spectrum of conservative to aggressive as a trader. Because when the market's opening this far above value, any longs you're taking are technically going to be aggressive longs. So if you're buying 98.75, or even if you're buying a little bit higher, even off the 2200 high volume node, then you are going to be an aggressive buyer. So this is not a setup that everyone is going to take, and there's really no setup that every single trader takes. We all fall on a different degree on the spectrum of how conservative we are or how aggressive we are. But 98.75 is good trade location, right? It is a support zone. So if you are going to take a trade setup, it's better to take it as close to support as possible, targeting a move into the 08 half to 10 half initial resistance. Now, the way the market approached the 2208 half initial resistance zone, you can actually even short that zone on first test. And the reason is that the market is short-term exhausted heading into the zone. You can see that the upside move originated off of 98.75, and then we pretty much went in a straight line into 08.75. So how the market approaches a zone is going to help determine whether we are going to fade that zone or not. So for example, if the market had gone up into, let's say, the 05-06 area, and then it started balancing and going sideways near the zone, and then it broke out, well, that would not be a good fade at initial resistance. That would not be a good short at initial resistance, because you would be fading a short-term bounce breakout. But in this case, the breakout area is the overnight high. And by the time the market gets up here, it's exhausted, which means that we could get a sell response. So you're probably going to get some price edge if you're shorting 08 half just based on good trade location. And you're only doing it because the market is short-term exhausted, right? So it depends on how that zone gets approached. And that's what I mean when I say you have to be conservative on the short side. It doesn't mean don't take any shorts. It means be more selective and take them depending on how the market approaches that zone. So for example, if we, let's say, broke out of this balance over here, right? Let's say we balanced over here and then we broke out to the upside. Well, then you wouldn't fade this zone because the zone would likely get taken out. But because we went straight line into it, that increases the odds of profit taking up at that zone. So at the very minimum, you'll get some price edge, and then you can see whether it's a worthwhile setup or not. On the downside, a good target would be the VWAP and the opening range high around the 2202 area, right over here. And then the third possible setup is long off of the 2200 high volume node with your stop loss essentially behind this swing low, right? So if you're getting long close to 2200 or even a tick below it, you can get in with a 2-point stop. And your stop is behind the IB low, and it's even behind that little micro swing low right before the open. And that way, on the upside, you only need to get a move into 2204 to get your 2R. So that's another potential setup. And like I said, it's going to depend on how aggressive or conservative you are on whether you decide to take any of these setups. So if you are conservative and you don't want to get involved at these higher prices, then you may not have any trade today, right? If you only want to take trades in direction of the larger time frame bias, then you wouldn't even be shorting 2208 half. The important thing is to figure out the type of trader you are and then execute in that manner consistently, not switching things up on a day-by-day basis. And one day you're being super aggressive and the next day you're being super conservative, but kind of figure out where you fall on that spectrum and build some rules, knowing yourself, and then execute those rules consistently and systematically. So that's how the day played out today. At this point, heading into the overnight session, the overall bias continues to be bullish, and the existing zones are going to continue to be in play. And if we get a breakdown below today's pre-market support, then we know the short-term sell side can be aggressive into today's initial support zone. But the market structure hasn't really changed a whole lot. It's just continuing to support the buy side in control above the pre-market support. So those are our main ideas heading into the overnight. I hope you all traded well, and I'll update you all tomorrow morning.